This is the Apple 1 month overview reading for the month of March 2024. It's currently January 23rd, 2023, 12:36 p.m. Eastern Time. Apple at the time of this reading, currently $194.56, that's USD. And the shuffle video that we're about to play for you for the March reading was created on January 8th, 2024 at 8 p.m. Eastern Time. That's this video here in the corner. The overall theme and behavior for Apple in March, the Ace of Swords indicates a significant amount of price change throughout the month. It also indicates an important price level on a one-year chart scale that will act as resistance, and there's a lot of price change moving into and or out of it, usually allowing for opportunity to trade in both directions, utilizing it as an entry and an exit point. It's crossed, however, with a brief peak that's easily missed, followed by a decline through multiple support levels. That decline, often it's caused by something that was once thought to be beneficial for the company. It has turned sour somehow. It's now more cause for concern. Behavior around the highest high or highs for the month of March, we have an important support level, a period of sideways rotation, I should say, along near that high or highs, and out of the high, there's a sharp drop that'll stand up in that period of sideways rotation. In that period of sideways rotation, we'll also be revisiting a price level that we recently met once before on a one-year chart scale, so it could be that we're revisiting a high. We'll look at that in more detail when we get into the paid version and take a look at the cross-reading congruencies. And then behavior around the lowest low or lows for the month, we have a sideways fluctuating decline into the lows, and it precedes a notable move to the upside. So often when you see the Empress card it's very comfortable, this opportunity in the low correlator position, because it indicates an opportunity, a moment impregnated, fertile, I should say, that you could impregnate with intention and start the growth of something new, good long-term investment possibly. In any case, we'll look at that again in more detail when we get into the paid version. Before we go any further though, I want to make sure everybody's aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube tips, and that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. So let's get back into it. It's important to understand that on a 1 month reading for SO meta-analysis, the timing is very, very often right on point to the day, but you have to give it plus or minus a day of wiggle room. In some cases, you'll need to do that to keep it accurate, and the reason being is that each card going left to right across the screen, it represents about 1 day of time, but not each card's energy will line up perfectly with 1 day of time in all readings. So you give it plus or minus 1 day of wiggle room, and in cases where you need to do that, which are seldom, but they happen, in cases where you do need to do that, make sure to follow the sequence of events as outlined in the prediction, because that will help to keep you on track. And always remember to trade responsibly, my friends. Never bet the house. I'm not right all the time. Remember that. If you trade moderately, you should do regularly pretty well, and occasionally not hot, but overall, you'll do pretty well. So on the first, we have there's a possibility of a high here. I'm seeing a high in a lot of March readings on the first, and we have a decline from a peak there to revisit a support level that on a 1 month chart scale that we recently met before. So in the last few days of February, we're rotating sideways along support here on the 29th, and there's a high there, a high on the first trading day of March, and here we go. It's also a cross-reading congruency with the March high. I'll talk about in more detail what that means in the paid version. On the 4th, we have a crest. It actually looks like we probably open lower on the 4th, rally pretty notably early in the day to create a crest, and from that crest we sell off down to and through support on a multi-day scale to do a U-shaped reversal below that support, come back and reuse it as support. Looks like we have a significant on the 4th and or on the 5th, but it looks like we probably come out of the low on the 5th, and that's where we turn that support into that resistance back into support. On the 6th, we have a peak towards the change there, but on the 6th we have a notable decline, increasing with momentum moving forward into another trough for the month, and then out of that trough, towards the very end of the day there, we have a rally, and I would advise not to chase that rally. Prominent peak in there, guys. It's a little unclear. It's somewhere the prominent peak is somewhere between the 6th, 7th, and then there's a significant as well between the 6th, 7th. My sense is that the peak probably comes before the trough, but it's hard to say. They're right on top of each other. And then on the 7th, we have a rally out of that trough, increasing or along a diagonal trend line, breaking through horizontal resistance on a 1 month chart scale, meeting a second resistance, then pulling back to somewhere between those two price levels. And then on the 8th, we have the prudence card. Very tricky chart behavior on the 8th. Chart behavior on the 8th. Tops or bottoms or some sort of whipsaw action that you could very likely do the wrong thing if you're not careful there. The key support, we decline to a key support there on the 8th, pretty notably. There on the 8th, and there's a universal hexagram there, which I'm seeing in several of the March readings around the 7th, 8th, so be careful for a sharp drop there, especially towards the end of the day. On the 11th, we have a resistance level that we've met many times before and failed to break through many times before. There's a rally into a peak at the beginning of the day. I'm advised not to chase that rally. Trough early in the day on the 12th will probably open lower, and then it'll be at a key support level on a multi-day scale. That sideways rotation along a key price level there on the 12th, we go from a trough early in the day back to a peak roughly around the same price level as the 11th. I'll talk about that again in more detail in the paid version. And that sideways rotation very, very close to where we have a prominent peak here early in the day on the 13th in a period of volatility that ends with a fast sudden move higher, taking us on the back to another prominent peak on the 14th, where there's a notable reversal into a prominent trough for the month early in the day on the 15th. A lot of price change between the peak on the 14th and the trough on the 15th. 18th, back to a prominent peak. The 19th, we likely, and there's sideways fluidity on the 18th. Equal amounts of bulls and bears, inflow and outflow, peak towards the end of the day. On the 19th, we probably open lower. There's sideways rotation establishing support. They're standing out on a 1 month chart, and then more sideways rotation establishing support from a peak early towards the end of the day on the 19th into a peak early in the day on the 20th. 20th, we go from a peak early in the day. It's a pretty mixed day. We go from a peak early in the day into a decline, and then we come back to that peak towards the cusp of the 20th, 21st. It might even be here. Probably in the morning of the 21st that it's slightly higher. There's a important price level later in the day on the 21st at an important at a peak again, but it's not as likely to be as high as the previous peak. And then on the 22nd, we likely open lower. First, we had mixed behavior back and forth between a resistance and a support, creating like a sideways S within a channel. And then we open lower on the 22nd, rallying along a diagonal trend line, and then that rally ends with a fast sudden move higher towards the end of the day, taking us to another peak, followed by a decline through that diagonal trend line with volatility as we move down into a trough towards somewhere around the 25th, 26th. So notable decline on the 25th. Actually, looks like there's a prominent peak and a prominent trough on the 25th, and we go from a decline on the 25th, a prominent peak at the end of the day on the 25th. There's kind of like a mixed. On the 26th, there's a rally that then turns around and ends up into more of a decline with a prominent trough there and a big move out of that prominent trough. On the 27th, a pop and drop, possibly another prominent peak there. Picking up on maybe a prominent high around the 26th, 27th as well. But there's a lot going on here, and again, the theme card is the board, so there's going to be like back and forth going on, a lot of volatility, a lot of back and forth price change around that resistance level, which we can use as an entry and an exit point, which I'm going to talk about in much more detail in the paid version. We do that though. Let's take a look at this reading thus far and see how we're doing. I can tell you right off the bat, not one of my best readings. I'm not very happy with it, but this is why we leave every video up, guys, because it's so easy to think that I'm right all the time, and people will just go and like bet the house on something if they think that. We are not right all the time. We're right most of the time, but trade responsibly. Don't risk it all, because it could be the time I'm wrong. You know, and even with that said, the January reading is not awful. It's just I had the highest high here on the 11th, prominent peak, highest high, right? Because almost the highest high. Well, first off, we had a highest high here at the very beginning of the month, the day before, or the last trading day of December, really. And you can see there was, right, that was a highest high thus far. And then we had a highest high thus far here on the 11th, 12th. So that was pretty accurate. The 8th, 9th. And then a little hazy is that we had a higher price level here. I had another prominent peak on the 19th and the 22nd. And it looks like we've kind of topped off, but I didn't see that as a highest high. I saw it more as like a prominent peak on the way to a lowest low. I still think that there's probably a pretty sharp drop somewhere here right around the end of the month. I think it takes us to lows. Not so sure about that, based on where we are right here. But there's probably a pretty sharp drop here at the end of the week. We'll have to wait and see what happens. Trades. Following our trades, you likely would have opened up a long position when rotating sideways, or partial long when rotating sideways on the 4th. And then you would have held that. It looks like we went lower on the 5th. You would have added to it either on the 5th or on the 8th in the morning, and then you would have closed out of it towards the end of the day when we went from the bottom of a range to the top of a range, which is that strength card. That would have been a really solid gain. On the 11th, or on the 10th or 11th, you would have been like adding to a short position around there. You would have closed on like the 17th. So depending on if you risked waiting longer or not, money, or you would have broken basically even. So you still would have made some solid money with this, and on a longer term basis, you would have been looking for troughs as opportunities to open up long positions. So you would have done so 8th, 9th. Here on the 25th, we'll see an opportunity. Pretty solid reading, guys. Not my best work, but definitely a pretty solid reading. I would put it at the bottom of my accuracy, even though it's still pretty solid. I would put it at the bottom of my accuracy. And to give you an idea, that January reading, October 25th, 2023. So even though I missed the highest high, I still called where we would have highest high thus fars on the way to it. It's pretty crazy. If you're interested in the paid version, which we're about to get into, this is where I talk about the best trades that I see and what type of chart behavior on a one-day chart scale to look for as far as entry and exit into those trades. We talk about price level information, both relative to peaks and troughs relative to each other, as well as if we get actual number price level information. That's all in the paid version. We talk about trades from like a one-year chart scale, a multi-year chart scale, and then we talk about the cross-reading congruencies and how those information they give us. They really are powerful tools as far as showing us where we fit into the greater pattern of things. All of that in the paid version. As well as the overall comparative performance between Apple and the S&P 500 in March. So if you're interested in that, guys, this is a really, really great way to support the channel. This is one of the best ways to support the channel. We know the names of everybody that subscribes like this. You go to our website, under our services, SO Meta Posts, scroll down to the subscription, click here to order. And you're looking for the Apple subscription, $111 a month, or if you're interested in this paid version of all of these cryptos or ticker symbols, as well as Amazon, Google, or Nvidia, all of those paid versions you can get for $250 through this all paid versions access. And this is our most popular subscription. Really, this is what helps it to keep the channel running smoothly. So much appreciation to everybody that does that. If you utilize this information regularly, guys, it's really the right thing to do. Much appreciation. And again, And let's get into the paid version. Make sure to follow through on that rule of karma. We're counting on you here at Tarot for Traders. Blessings to all my angel investors. Stay tuned if you got the paid version.